Hey everyone, over the last few months, the Indian stock market has been facing some volatility due to expansive valuation as compared to the earning growth and FII selling pressure. Especially the broader market is looking a bit overheated at index level. Having said this, I believe that there are ample bottom-up opportunities where good mid-cap and small-cap companies have corrected recently from the peak. That's where I did an extensive analysis of mid and small-cap companies that have corrected 15% or more from the peak, but FIIs and DIIs are showing strong conviction and adding them in the portfolio. And I have identified 10 stocks. Here please note that there can be a case where promoter holding has reduced, but that could be due to the fact that promoter of a company is a private equity firm and is booking profit. But as long as strong hands of institutional investors are adding stake and public holding is reducing, I have considered the stock in that list. Also, sometimes promoters raise money via QIP for further growth, and for that they dilute stakes. So net-net, I have identified companies where FIIs and DIIs are increasing stake and public holding is reducing. Please note that this video is a good starting point for idea generation, but you need to deep dive before investing your money. Alright, let's get started. So the first stock in the list is MediAssist. It is the largest TPA in the health insurance industry. TPA means third party administrator. They basically act as a link between policyholder, insurance firm and hospital. There are many administrative roles like claim processing of health insurance policy, resolving customer queries, fraud detection in the claim, process automation, as well as network management between hospitals and insurance firm. That's where insurance companies outsource this work to TPAs like MediAssist. If you look at company shareholding, it shows promoter holding reducing. But please note that its promoters are PE firm that invested long back and made good profit. So they are booking profits. Interestingly, strong hands of both FIs and DIs are consistently adding stake in the company. FI holding is up from 9.6% to 16%. That include very reputed names like Goldman, Small Cap World, Nomura and Jupiter India Fund. DI's stake in the company has jumped from 30.6% to 41.3% and again include all top domestic institutional investor. Public holding is down from 22.2% to 21.8%. The last buying in the company was in September month at levels of 612. And today MediAssist is at levels of 584, which is down around 18% from the peak. Please note that MediAssist is an asset-light tech-oriented company and sales are consistently growing from 277 crore in 2019 to 681 crore. Net profits have consistently grown from 26 crore to 87 crore. It enjoys high ROE of 19%, ROCE of 23%. Debt is also negligible and company generates a good cash from operation. MediAssist is a great proxy for growth in the healthcare insurance sector of India. Currently, it commands a market cap of around 4,100 crore with EV to EBITDA of 23 and PE ratio of around 48. That looks decent. I've already done a detailed fundamental analysis on this company. Now, in case you are new to the world of investing and want to learn how to do the fundamental analysis and how to analyze the valuation of a company, there's a very interesting book that I would personally like to recommend to you all, which is specific to Indian stock market. It's called Stock Investing Mastermind. This book is available on Zebra Learn platform. It provides fantastic insights regarding how to evaluate every aspect of a business, right from decoding financial statement to evaluating companies' growth prospect. Likewise, understanding fundamentals, valuation, and even keeping up with industry trends. One aspect that really differentiates this book from others is the visual guide that it has used to explain difficult and complex topic in a fun and easy way. Some very interesting topics this book covers include how to read company's annual report, how to analyze financials of any company like balance sheet, income statement, cash flow statement, then how to do valuation analysis including PE ratio, price to book, EV to EBITDA along with DCF model. Then how to evaluate industry of any stock, for example competition, market size, portfolio forces, likewise when to sell a stock, what makes 10x and 100x investment and so on. The best part of this book is it's not just about theory. Every concept is explained with real world example. So whether you are a beginner or have some experience, this book is perfect to learn and sharpen your skill in the Indian stock market. You can use coupon code Sahil20 to get additional 20% discount. This is an exclusive year-end discount for only limited time period. I provided the link in the pinned comment and description. Second stock in the list is Craftsman Automation. Incorporated in 1986 in Coimbatore, Craftsman Automation is an engineering company that manufactures various components and sub-assemblies for auto industry and engineering segment. Its key products include powertrain products, cylinder blocks, cylinder heads, camshaft for auto sector, then industrial gears, storage solution, locomotive engine components for industrial and engineering segment. If you look at its shareholding pattern, promoter holding has reduced from 59.7% in December 21 to 54.9% in June 23. But entire stakes are purchased by FIIs and DIIs. FIIs have consistently increased holding in the company from 3.7% to 12.5% and include reputed names like Government of Singapore, Goldman Sachs. Then DI holding increased from 14% to 16%, that again include top institution. And recently there was QIP of 1200 crore where company diluted another 6% stake that was purchased by both FIIs and DIIs. Public holding in the company has consistently reduced from 22% to 13%. Company's revenues have consistently grown from 1100 crore in 2017 to 4600 crore and net profits have grown from 80 crore to 273 crore. That's a fantastic growth rate. Company enjoys high ROE and ROC of 20% and debt to equity is well under control. Company also generates good cash from operations. Overall, Craftsman Automation is a good proxy for growth in both automobile as well as industrial sector. Its stock price has corrected 25% from the peak to current levels of around 5,400. Currently, it commands a market cap of around 13,000 crore, EV to EBITDA of 17 and P ratio of around 51. Third stock in the list is Marks & Pharma. It is engaged in the research, manufacturing and marketing of generic pharmaceutical products that include OTC products, that is, products sold over the counter without doctor's prescription. Plus, it also sells generic prescription medicine that include capsules, oral liquid and ointments. FIs have consistently increased stake in Marks & Pharma from 2.6% in December 21 to 21.3%. DI holding is up from less than 1% to 4.1% and public holding has consistently reduced from 48.7% to now at 30.7%. Marks and revenues have consistently grown in last 10 years, although net profits have witnessed volatility especially in 2017 and 2018. But since then, it has grown at fantastic rate. Company enjoys a good profitability with ROE of 16.5% and ROC of 20.6%. Debt is negligible and cash conversion is also decent. Now there are multiple factors that would drive the growth in pharma sector, including aging population, especially in the developed countries, then rise of chronic disease and so on. Markson has planned to capitalize on this opportunity by increasing its penetration in the US market. It aims to double its OTC revenue in the US in next 2 years. This slide gives a good idea on the product expansion pipeline across UK, US, Australia, New Zealand and rest of the world. Markson share price has corrected 18% from the peak to levels of around 300. Today it commands a market cap of around 13,300 crore with a PE of around 38. I've already done a detailed video on Markson Pharma a few months ago. Fourth stock in the list is Mrs. Bector Food. Company's product portfolio includes two categories. First is biscuit under the brand name Cremica and bakery product under the brand name English Oven. In addition, company also has its presence in B2B segment where it manufactures and sells a variety of bakery and frozen products to QSR customers, cloud kitchens, multiplexes such as PVR, as well as your certain hotels, restaurants and cafes. FI holding in the company has consistently increased from 2% in December 21 to now at 13%. And DI holding in the company has increased from 4.8 to now at 20.9%. And public holding is significantly down from 42% to 16.9%. Company's revenues have grown from 690 crore in 2018 to currently at 1770 crore. And net profits have consistently grown from 36 crore to 143 crore. Company enjoys very high ROE of 23% and ROC of 25%. Debt is negligible. It also has a very good cash conversion rate. Mrs. Bector is consistently growing its business with capacity expansion with capex of around 350 to 400 crore between FY23 and 24. Then launch of new products with focus on premiumization trend, widening distribution as well as marketing campaign. Its share price is down around 25% from the top to current levels of 1640. Today it commands a market cap of around 10,000 crore with a PE of 70. I've already done a detailed video on Mrs. Bector in the past. Then fifth stock is Sona BLW. It's a precision forging company that has strong presence in auto sector. This slide shows the product offering of company for passenger vehicle, commercial vehicle, buses, off-highway vehicle, electric two-wheeler, three-wheeler and industrial automation. EV contribution in company's business has grown from 2% in FY20 to now at 35%. FI holding in the company has consistently increased from 9.7% in December 21 to 33.5%. And DI holding in the company has increased from 16% to now at 31%. Although its promoter holding has reduced significantly, but again its promoter is an investment firm that invested long back and now booking profit. But entire stake sale has been absorbed by FIIs and DIIs that include very reputed foreign and domestic institutions. Public holding in the company did increase from December 21 till March 23, but since then it has fallen significantly. Company's revenues have exponentially grown from 600 crore in 2018 to now at 3,500 crore. Net profits are also consistently growing at a fast rate. Company enjoys very high ROE of 21% and ROC of 24%. Debt is negligible. It also has excellent cash conversion rate. As of today, company has an order book of 23,100 crore, which is 7.3 times its FY24 revenue. Out of this, EV order book is 78%, where 56% is from passenger vehicle. So there is a strong revenue visibility. Recently, company has announced acquisition of Escort Kubota Railway Division. They have expanded the vision from auto to entire mobility segment. Company share price zoomed significantly during listing and valuations became very expensive. Since those highs of December 21, stock price is still down 25%. But PE ratio has fallen significantly from highs of 200 to now at 63. Today, company commands a market cap of around 3,700 crore. Valuations are still slightly high at a PE of 63. But company is growing at a fast rate and has a dominant share in its niche with very strong order book. Very reason why FIIs and DIIs have consistently increased stake in the company. I've already done detailed video on Sona BLW in the past. Sixth stock in the list is Senco Gold. Incorporated in 1994, Senco Gold is one of the largest organized jewelry retail player in India with a pan-India presence having 167 showrooms with prominent presence in eastern side of the country. It operates in a mix of its own showroom as well as franchise model. DI holding in the company has consistently increased since its listing. FIs have also increased stake in last 2 quarters. Although promoters have slightly reduced some stake in the last quarter, but that is a QIP where promoters are raising 459 crores for company's future growth. Public holding has reduced from 14.3% to 12.9%. In terms of future growth, India is world's second largest gold market, and there's a clear trend of shift in market from unorganized gold retailers to organized retail chain. That's where companies like Senco Gold are bound to do well. And it's clearly reflected in company's financials, where its top line has consistently grown from 2,200 crore in 2018 all the way to 5,600 crore. Net profits have also consistently grown from 72 crore in 2018 all the way to 218 crore. Although ROE and ROC are slightly on the lower side at the moment, and debt to equity is also above 1. Here cash from operations are negative, but please note that it is due to high inventory, which is nothing but gold. That is an appreciating asset class. So high inventory should not be a problem in this case. Senco share price has corrected 31% from the peak to current levels of around 1,060. Today company commands a market cap of around 8,700 crore with a PE of around 40, which is the most reasonable valuation among all listed gold retailers. Then seventh stock in the list is Nykaa. It is the largest beauty, personal care and fashion platform in India. I clearly remember Nykaa IPO listing in October 21, where it got listed at 80% premium on first day. And then stock price kept falling over the period and tanked 70%. Although there is some recovery from the lows, but stock is still down significantly. Interestingly, FIs increased their stake from 5.7% to 12.6%. Although there is a slight reduction in holding in last few quarters. But DIs are extremely bullish on the company and have consistently increased stake from 3.4% to now at 21.8%. And it includes top domestic institutional investors. Public holding in the company has significantly reduced from 38 to now at 15.8%. Company's revenues are growing at a very fast rate. Operating profits are also growing at fast rate. However, currently company is investing in growth and hence its operating profit and net profits are very low. That is the reason if you look at PE ratio, it is showing more than 1,000, which is not a true reflection. Price to sale is a better metric to gauge the valuation, and company's price to sale has fallen from peak of 41 in December 21 to now at 6.5, which is a 84% fall from peak valuation. As far as future is concerned, Nykaa has a very strong positioning in Indian online fashion and beauty segment, and company is also expanding its offline presence. So growth potential is looking good. The only question is how fast Nykaa can grow its profits. Clearly, institutions are extremely bullish on the company. Next 3 stocks that FIs and DIs are adding are from one specific sector. Sector is affordable housing, and stocks include Aavas Financials, Home First and recently listed India Shelter. Please note that all 3 companies have private equity firm as early investor and now they are booking profits. But both FIs and DIs are adding them. In case of Awas, DIIs are consistently increasing stake in last 12 quarters. FI's holding is more or less same in last few quarters. Public holding has reduced from 14.7 to 12.5%. Awas share price has corrected significantly from the highs in last 3 years and currently trading at a market cap of around 13,000 crore with price to book of 3.25. In case of Home First, FIs have increased stake from 9.3 to now at 25.5%. DIIs have increased stake from 6 to now at 12%. Public holding is down from 50 to 38%. Company share price has not moved in last 1 year. It currently commands a market cap of 9,200 crore with a PB of around 3.8. I've already done a detailed video on affordable housing sector of India, so not getting into the detail. Then third company is India Shelter that got listed last year and DIIs have increased stake from 12.6 to 21.8%. Public holding is down from 33 to 24%. Company's market cap is around 7,500 crore and price to book is around 3. So in this video, we identified companies that have corrected around 15 to 30% from the peak, but institutional investors are consistently adding them in the portfolio and public holding is reducing. This list includes MediAssist, Craftsman Automation, Marks & Pharma, Bector Food, Sona BLW, Senco Gold, Nykaa, Awas, Home. Apart from this, there are a few more stock names where institutions are quite bullish, but stock price has not corrected much. For example, in case of Newgen Software, FIs are consistently increasing stake and public holding is down consistently. But stock is trading near all-time high. We have identified this company long back and stock price has jumped around 8 to 10 times from those levels. Then another stock is Nuvama Wealth, where FIs have increased stake from 6.7% to 13.9% in last quarter and public holding is down significantly. But again, stock is near all-time high. Then Gravita India is another stock where both FIs and DIIs are increasing stake and public holding is reducing. Gravita again we have discussed at very low levels. So this is it for this video. Now tell me in the comments which stock from this list you find interesting to consider in 2025. If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.